First, let me just say thank you for coming out tonight. This is the best turnout we've had so far. It's only the second meeting, but still, best turnout we've had so far. I'm Pat Forbes. I'm with Louisiana Office of Community Development, and our whole job is administering federal grants for disaster recovery. And that's what we're here to talk to you about tonight. I will hit all of these points as we go through the presentation, probably more than once, but I'm going to say a few things right now just to make sure that we get them in early and often. One, we've got $600 million allocated to the state right now for Hurricanes Laura and Delta. We've written a proposed action plan for how to spend that money, and we're here tonight to get your thoughts about what we've put together so far so we can perfect it before we send it to HUD and tell them how we're actually going to spend the money. So that's the whole process. $600 million is a crazy number that none of us can really wrap our heads around, but I can tell you, our agency having done the unmet needs analysis of figuring out what do we really need to have a great recovery, we don't think it's enough. The governor doesn't think it's enough. The legislators don't think it's enough. And there is ongoing work as we speak to make that number go up. In the meantime, we've got money allocated to us, and we have the rules for that money now. And so we are now over a year and a half since these hurricanes hit y'all. We can't wait to see if we get more money. We got to start the programs as soon as we can, and if and when we get additional funds, we'll adjust the action plan to reflect those additional funds. So everything we talk about here tonight, know that it is in the context of, we know it's super late to be starting to spend recovery funds. We just now got the opportunity to get the money. We know we don't have enough money and we need more. We got to do what we can with what we have right now, and so that's what we'll be talking through. I do want you to know that my agency has been working on this action plan since last spring. We've always anticipated that we would get money for these hurricanes. And we couldn't know exactly what the rules HUD would put out were until we got them in January. But we've been working with folks and trying to come up with a plan for almost a year now. We will do everything that we can to speed this process, but there are big chunks of it that rest firmly at the federal level, and there's just not much that we can do about it. I'll point each one of those out to you where we have an impact and where we don't. I will say this is it's a good crowd. It's a lot of folks. If you can hold your questions until we get to the end, we're going to have a question and answer session at the end. But what I would particularly ask you to do, if you've got a pen and paper, our purpose tonight is to take your comments about this plan. If you see something in the plan and you think that's wrong, we need to do this differently, whatever that might be, if you would please make a note about that so that then you can share that comment with us at the end so we can capture everybody's comments and get them in the response. I would really appreciate it. Okay, said that part already. About the comments, I will also tell you this. We will record every single comment that we get, and we will respond to every single comment that we get from now to the end of the comment period. And we will submit those comments and those responses and the adjusted action plan to HUD when we do the final action plan. So that's the process. That's why we're here. You tell us what you like and don't like. We are obligated to think through that, to answer it. And that answer might be, we can't do that. But it might also be, thank you, we had 40 other people tell us that, and we need to make this adjustment in the plan, and then we'll adjust the plan. But in the end, HUD gets all the comments, all our responses, and the final action plan that should reflect those comments and responses. Okay, we'll do an overview, talk through unmet needs. It's kind of a term of art, but I'll tell you about that in a little bit. Then we'll go over the programs. So here's the series. Unmet needs is what HUD calls what we need to recover. They say, you had this much damage, you've gotten this much from FEMA, you've gotten this much from insurance, here's your gap, and that's what we're going to fund. And that's how they come up with this number. We do those same calculations, we come up with bigger numbers than they do. Go figure. But be that as it may, it's a critical part of the process is to calculate unmet needs. And then the next step is to say, okay, we understand the unmet needs. How are we going to spend the money to address them? Whether it's enough money or not, another question, but we've got to start with that and address it. And then talk through the engagement process, but y'all are deeply involved in that right now. So here's a timeline. September of 2021 is when Congress passed the bill that included this money. It included $5 billion for all the disasters in 2020 and 2021, including Hurricane Ida. But what they also did was required HUD to allocate funds for the 2020 disasters within 30 days. So we got Congress appropriating the funds. 30 days later, HUD allocates money for 2020. That's when we know we're getting $600 million. The next step, we still can't write an action plan because HUD still has to publish the rules that go along with that money because they change every disaster because the money comes from a separate appropriation. So they published the rules January 31st. On the same day, we opened a homeowner survey for people whose houses were damaged in Laura and Delta. I will talk about that survey probably 20 times because it's so important that if you're a homeowner, your house was damaged in Laura or Delta and you think you had major or severe damage, that you fill out that survey. And it's available right now and it's easy to get to. And Mr. Haley will talk to you about it whenever he gets up here in a few minutes. But we got the survey stood up and then we published an action plan. The only reason we were able to do this in 3 weeks is, like I told you, we've been working on this for almost a year now. So we had a lot of the pieces in place. We didn't know exactly how HUD would ask us to compile them, and so that's why it took us 3 weeks instead of 3 days. But we've published the plan. We are now taking public comments, obviously. There's an official 30-day period for taking comments. It won't start until we get plans published in Spanish and Vietnamese, which we expect to be Monday. 30 days starts. But all the comments we're taking right now are just as valid as if they come during the 30 days. And then there are federal steps of HUD reading our plan, approving it, signing a grant agreement with us, blah, blah, blah. And you get to the end of that, our best guess after having been through this several times is that probably early summer 2022, this year, is when we'll be able to stand these programs up. We'll be ready the day we get it to stand them up. But we don't expect that we'll have the funds available to us from HUD until then. Okay, this is not new information really. We submitted to HUD already. There is another appropriation coming. I don't want to give anybody false hopes. Don't have expectations one way or the other. Like I told y'all, the appropriation that came in September, it included money for 2020 and 2021, and everybody acknowledges that it's not enough money for Ida and the 2021 disasters. So there is every expectation. In fact, we even thought it might occur this week. That doesn't look likely now, that they're going to appropriate more funds. What the governor and the congressional delegation are working on is making sure that additional money for Laura and Delta is included in that next appropriation. So that's where we're hanging our hat and putting our effort right now to try to make that happen. I'm not telling you that's going to happen. I have no idea what the outcome of that will be. What I know is we're going to spend the $600 million that we have now as well as we can based on what we hear from you. You probably don't need me to remind you that you've been through 4 of these 6 disasters here in Calcasieu Parish. It's been a busy couple of years. These are federally declared disasters in the state in 2020 and 2021. Calcasieu Parish has the distinction of being the only parish that suffered 4 of those declarations. You can see there are a couple of other parishes that got 3. There are only 3 parishes in the state that didn't get a federal disaster declaration in 2021. These are the parishes impacted and declared by Laura and Delta respectively, and combined, the dark is both. When HUD allocates money, they do an analysis called most impacted and distressed. And what that means is how much damage did an area incur from the storms, and how vulnerable is the population in those areas. And they put those 2 things together and they come up with most impacted and distressed. These parishes on the right, HUD has called the entire parish, for all those parishes, most impacted and distressed. These zip codes in these other parishes, HUD has also assigned the label most impacted and distressed. Why does this matter? Because HUD requires that 80% of this $60 million be spent to benefit in these geographic areas, whether it's for individual homeowners, affordable rental properties, or infrastructure projects. We have to spend the bulk of the money in these areas. They also, however, let us add other eligible parishes. And the way they do that is say, if there's other presidentially declared parishes, or counties usually for them, then you can add those. We did that. So people are eligible for our Restore Homeowner program, for instance, if they were damaged by the storms and meet all the other criteria and live in any of these parishes, then they would be eligible. Be that as it may, we're still obligated to spend 80% of the money to benefit in these specific areas. HUD also requires that we spend 70% of the funds to benefit people who are low to moderate income. That means below 80% of the area median income. They have waived that requirement in the past. The last time they did it was for us, and that was 6 years ago. None of us has any expectations that they are planning to do that again. We still are prepared to ask for that waiver if it's necessary, and there are data analysis things we can do to try to do that. But right now we're assuming that we will not get a waiver for that, which means we've got to focus programs on folks who are low to moderate income in the community. These definitions may not mean anything to you, but essentially each parish has a median income, about what's the average amount that a family of 4 makes. And what this says is whatever that average is, we're going to serve people who make 80% of that or less. If that average is 100,000, it's not. I'm just using easy numbers because my math is not that great. If that is 100,000, any family of 4 that makes 80,000 or less would then fit the LMI category. And we've got some numbers here for Calcasieu Cameron. You can see that it is household size is also a factor in it. Their table goes all the way up to 8 if you have a bigger household. We just put these up here for people to get a general idea. Okay, unmet needs assessment. This becomes a critical part. It seems like minutia and it seems like inside baseball, but it's so important to the recovery because one, it determines how much money we get, and two, it determines how we decide to allocate that money to address those unmet needs. This action plan that we're talking about tonight is 80 pages, and 40 pages of that is our unmet needs analysis. In other words, our case to HUD for all the damages that have been sustained and what we need to try to address them. This is just a snapshot of some of the information that we have. We'll tell you almost all of our data and almost all of the data that HUD uses to do their calculations comes from FEMA. Either FEMA's individual assistance database or their public assistance database. That's where we get our numbers. The numbers speak for themselves. There are some interesting things here. Renters, affected rental households outnumbers affected homeowner households. That's a bit of a turnabout from other disasters that we have been through. Insurance, you'll see a high level of uninsured folks in here, but that's actually by design, and that is because FEMA essentially kicks people out of their IA program if they have insurance. They assume that your needs are met and that you don't need anything from them. And so that tends to drive this number up. The important number to look at is in the bottom left over here, especially when we're thinking about the Restore Homeowner Program. And that's because this 6,303 families, that's essentially our universe of potential eligible households for that program. That's people with major or severe damage as determined by FEMA. The thing that we keep pointing out to public officials and everybody else who will listen, nonprofits, everybody we're working with, these 12,814 people with minor damage, right now, they're not eligible for our program. If they think that their damage assessment from FEMA is inaccurate, they need to appeal. We need you to appeal to FEMA to get that major declaration so that we can help you with this program. Another thing that HUD has added to their criteria for us to pay attention to is the vulnerability of the population. There are things like people's age, people's income, disabilities, people living in manufactured homes that would indicate that a community was more vulnerable to the same disaster. There's also different levels of risk wherever you are in the state. What this map represents is sort of the overlay of those two. Where are the most vulnerable populations living in the most dangerous places? So if you look, you can see some like side-by-side census tracts that are different colors. It probably doesn't mean they have different risks so much as they've got different vulnerability in their population. It's a poorer population, an older population, population with a higher percentage of people with disabilities. Okay, this is what we're here for. This column right here, the fourth column, that represents the proposal that we're showing you tonight for how to spend $600 million on recovery from Laura and Delta. This column over here, the second column, that's what we've calculated is what we really need. That's what we're continuing to tell HUD and the White House and Congress, that we need additional funds for this recovery. But what we got to focus on right now is what we have. That's the funds over here and the percentages. Couple of things in here that I will point out. One requirement from HUD is that we meet every single low to moderate income housing need before we can move on to other types of programs. That's why, for instance, we only have $5 million in economic revitalization. We've heard over and over again that small businesses have been terribly impacted, and that's having an adverse effect on the recovery of the region. But until we fill the LMI housing needs, we're not allowed to go put money into economic development. Another thing that I will point out is this infrastructure number. One thing that Congress did was said, okay, HUD, go figure out their unmet need, and they did that, and then add 15% to that for mitigation activities. And what mitigation activities are is things that will reduce the risks from future disasters, not address the impacts of the disasters we've already been through. In other words, we can't spend that 15% on going and rebuilding more people's houses. We can't spend it necessarily just on going and building more affordable rental housing. We have to spend it on something that's going to reduce future risk. Now, what we can do is spend it on enhanced construction standards for those houses, for those rental properties. We can spend it on buyouts, for instance, to help people get out of harm's way. We can use it, as we're proposing, to pay the local match on hazard mitigation grant program, which I'll explain to y'all in a minute. But this is one of the areas where we're certainly looking for input. The other piece is paying for the match for public assistance. Whenever a school gets whacked, FEMA comes in and they rebuild it. But what not everybody knows is that they only give you 90% of the money in the case of Laura. They only give you 75% of the money in the case of Delta to rebuild that school. The school board's got to come up with the rest of the money. What we're proposing here is that with our infrastructure funds, we would cover that local match so that these already overburdened local entities don't have to try to come up with that money. I'm going to hit all of these independently. So here are the programs that we're proposing, and actually we've got a detail sheet on every single one of them. I'm just going to leave this up for a second so you can kind of get a feel for how the money is distributed among the different programs, and then I'll talk about each one individually. Okay. First, flood insurance program. Whenever we rebuild somebody's house or repair somebody's house and they flooded, they got to have flood insurance before we can walk away and say, okay, we're done. This helps us, this lets us help folks who can't afford that flood insurance, pay for insurance for a year so that they can get back in their homes and we can have a compliant project done. Interim housing assistance. If we've got to go tear down somebody's house and rebuild it for them because it's essentially been devastated by the storm, sometimes people don't have anywhere else to go. This gives us an opportunity to provide some assistance for them to get a place to stay while we're rebuilding their home. And not much, mind you. $1.5 million total in both of these programs, so it's not a lot of money. So second, y'all are probably familiar with this. It helps people who have not purchased a home before to switch from being renters to buyers. It helps with things like down payment and closing costs. Middle market loan program is something new that, for us at least, we have one that's just now rolling out. But we heard loud and clear, especially from this region, that look, it's not just low to moderate income people who can't afford to pay rents here. Working people making 80 to 120% also can't afford rents because the rents are through the roof. The middle market loan program creates some of those middle market affordable rents, if you will. So instead of just doing LMI, we'll have LMI and 80 to 120 AMI eligible for the rental properties. Prime piggyback, you can see that's where most of our affordable rental money is. We've done this since Katrina and Rita. It is essentially using CDBG money in conjunction with low-income housing tax credits to build affordable housing that will stay affordable for at least 35 years. That's the model. We've done it three times now. The deviation for us in this program is that prime part of the title. What that means is we're no longer going to build affordable rental housing in the most dangerous places in our communities. What we find disaster after disaster after disaster is that we've done affordable rental programs, and where do you think the housing winds up? It's in the places that flood the most often because that's the cheapest land. We're not going to do that. We're going to, the projects can't be in the 100-year floodplain. If they're in the 500-year floodplain, they got to be 3 feet above the natural ground. The construction standards will keep the roof from blowing off in 150-mile-an-hour winds, keep the windows from blowing in 150-mile-an-hour winds. And what that all means is that after the storm is gone, people can move back home days later, not weeks, not months later. And it costs extra money, and so it is in fact a policy decision. Nothing's free, but from what we've seen from other disasters, it's critical that we keep making the infrastructure stronger. We have an example in Lafourche Parish where we built some affordable rental housing, and just by coincidence, it was finished just before Ida hit. And it's practically the only available rental housing in Lafourche Parish now because it was completely unscathed and people moved in 3 days later. And anyway, I'm sorry, I'm starting to preach a little bit. Rapid rehousing program is a homelessness prevention program, essentially. We all know that disasters can increase the risk of homelessness for families. I understand the irony of calling it rapid when we're standing here in March talking about a disaster that happened in August or September, October of 2020. Nonetheless, there are people out there still at risk of homelessness, and that's what this program is for. Neighborhood landlord. There are lots and lots of mom and pops out there who have 2, 4 rental units and they got damaged and they can't afford to rebuild them. We need the rental markets to get those properties back. Neighborhood landlord loans them money to rebuild it. It's a forgivable loan. They never have to pay it back if they rent to low to moderate income renters for a certain period of time at affordable rates. So it's just a way to sort of get that piece of the rental market back for folks who don't have any other way to get there. Permanent supportive housing, it's wraparound services for people who need health care or mental health care to be able to continue to live independently. It's a federal requirement that we do that. It's also a great idea. Keeps people the opportunity to live independently. And then the economic development program. So what we do essentially with this, and this will be the 4th time we've done this, is we identify local nonprofits, government entities, credit unions, people who know the businesses that have been impacted and have the wherewithal to do loans, and we just grant them money. And they go provide loans to small businesses through an application process. We set the criteria and all that stuff, but it is essentially to try to keep small businesses from going out of business when they are getting to the end and don't have much other choice. FEMA match, did I already talk about this some? Okay, I think it's self-explanatory. There's a certain obligation that local government and nonprofits have to pay part of the rebuilding costs, and this takes that burden away from them. And I will point out, this is an estimate. We don't know what that number is ultimately going to be. We work very closely with Governor's Office of Homeland Security and Emergency Preparedness to get that estimate as close as possible. But they're taking their best guess right now. That could go up or down, and that money would shift to other programs if it goes down. And then hazard mitigation grant program. One thing that FEMA does is give extra money to disaster areas to help them be more resilient, better prepared from future disasters. What we're proposing here is that we would use the 15% mitigation funds that I talked to y'all about earlier that's in CDBG. This can get really confusing. It's confusing for me, I promise you. They've given us 15% extra in CDBG funds over and above our recovery needs that are exclusively for mitigation purposes. At the same time, FEMA is over here giving the state hazard mitigation grant program funds. They're for similar purposes. Buying people out of harm's way, elevating homes, doing flood risk reduction projects. This has a 25% match on it. We've got just about enough money here to cover that 25% match. So that's the proposal here. And then the Restore Louisiana Homeowner Program, which I'm going to ask Mr. Jeff Haley to step in and take over for me here.
All right, well, good evening. What I'm going to do is I'm going to go through the slides just so I make sure that I cover everything, and then talk a little bit more detail about the Restore Homeowner Program. I know that some of you, probably a lot of you, have questions about that, and I want to try to give you more detail so you understand that program. The Restore program is our homeowner program. In the action plan, we are proposing, obviously our state was hit in 2016 by the floods, and we had a Restore program. We are just about finished with that program. We've made a lot of improvements from Katrina Rita days to that program, and so we're not really trying to recreate the wheel. Here we want to be able to model that program for the Restore 2020 program. It helps us to expedite it and get it moving, and so that's a little bit about what we're trying to do in the action plan. It is a program that is here to do, as you see, repair, replace, and do some elevations of homes where we do reconstruction. So it's geared at homeowners, and it's really geared at doing either rehabilitation, rehab, or doing reconstruction, which would be a new home. Some of the objectives here is, it's been mentioned earlier, and I'm just bringing this up again. I'm going to talk more about the survey. But one of the requirements, when HUD allocated that $600 million, they did it based on an unmet needs analysis that they used the FEMA database. All applicants to be eligible for the Restore program had to apply with FEMA. They had to be able to have a FEMA inspection and FEMA make a determination. This is how FEMA sort of determines whether you had major or severe damage. They look at what they call your real property. That's the structure. If they determined it had more than $8,000 worth of damage, then you would be considered major or severe versus minor. If they looked at, in some cases, if the homeowner, they look at personal property, that's contents. If they determined that you had more than $3,500 worth of damage to the contents, then they put you in that major severe classification. And then finally, if you had more than a foot of flooding. So it's any one of those three. It's not a all and, right? It's just any one of those that if you fall into it, you're in that slide that we looked at earlier where there were 6,300 people between Laura and Delta that had major severe classification. That's the group of people that this program is going to be able to serve. This slide helps break it up a little bit more into how we go about serving those people. It's sort of the priority we put on it because, as mentioned earlier by Mr. Forbes, 70% of the $600 million, so $420 million, has to go and serve people that are at 70%, at 80% area median income or below. That's what we call low to moderate income. And so a big chunk of the $600 million has to serve our low to moderate income communities, families in our communities. This is how we tell HUD in the action plan we're going to sort of prioritize that. I'm going to give you a test afterwards, so I'm going to hope everybody's paying attention because you're ready for that test, but I'm not really. But phase one, what we're looking at is hitting and targeting those people that are at that low income, under 50% area median income. Basically, that's the criteria. Those are going to be the people that we serve first. Those are going to be the people that will be eligible for repair, either reconstruction or even reimbursement of some of the work they've done. Phase two then takes, now we've served all the people that are under 50% AMI. Now we're looking at the 50% AMI to 80%. So we're still low to moderate income folks. But notice we have one other criteria here. We want to make sure, because of that socially vulnerable population that HUD says you have to tell us how you're going to serve those folks, we're looking at the families that either have elderly members in it, and elderly I get, 60, the older I get, 62 is not that old, but in HUD's mind, 62 is considered elderly. So I guess that'll be a good thing for some of us. That's the elderly population, or there's a member in the family that has a disability. Once we've served phase two, you'll notice that phase three, the only distinction here, it's still that area median income, 50 to 80, but it's just the LMI population. So we've already got the very low, 50%. We've already targeted elderly and disability. And now we're looking at the population that is low to moderate income families, but maybe you're 45. And so that would be phase three. Once we can show HUD that we have served all of those people, and that helps us hit that 70% expenditure rate, then we move into what we call phase 4, 5, and 6, which now is looking at the families that were impacted that aren't considered low to moderate income. So their income is over 80%, but we still have some priorities. Notice in phase 4, the distinction here really is going to be your parish. It's focusing on, it's saying, okay, here's the population that's not low to moderate income, but they were in one of those most impacted and distressed parishes that HUD identified. Remember that slide that listed the parishes and the zip codes? So Calcasieu and Cameron would be in that. So if you're not LMI, but you're in Cameron or Calcasieu Parish and you fill out the survey, you're going to probably be in phase 4. Phase 5 then is looking at all those other parishes. It's kind of saying, okay, let's get the rest of the population that was impacted that's not LMI. And then lastly, phase 6 is looking at those homeowners that had the wherewithal somehow to get the repair work done. They've finished their home, they've completed it, but if we have money available, we want to try to be able to do a reimbursement for those homeowners. They're just not the first priority because they're already back in their homes. And I'm going to go back to that in a little bit, so don't stress on that, because remember I said we have a test. A couple of things just to reiterate. We've already talked about homeowners with that minor damage as determined by FEMA aren't eligible for this program. HUD's not giving us the funding for that. That's that 12,000 people. So we recognize there are people that were impacted, but according to FEMA's records, did not get a major or severe classification. When you fill out the survey, and this is the part really to listen, at the end of the survey, you get a message that sort of thanks you for doing the survey. There are two different messages that we give. If you get a general message that's just thanking you for doing the survey and telling you that there will be more information coming, you can probably know that you are in that major to severe classification and you're going to phase. If you get a message that thanks you for filling it out but makes the comment that according to the FEMA records that you aren't in the major or severe classification, you need to contact FEMA. There's going to be the number, there's going to be the website. Really pay attention to that, because that'll tell you right off the bat, even though you've done the survey, you don't even have to wait, you don't have to call me or call anyone else. You're going to know you're not going to phase, because our database is showing, the FEMA database is showing, you didn't hit the major or severe classification. And the only way that you're going to be able to apply and move forward in the Restore program is to appeal that with FEMA. That's not something that OCD, the Office of Community Development, can do. It's not our records, it's through FEMA. And so we're trying to provide that to you guys up front. I don't want people, you waited a long time. I don't want you being disappointed longer. We're trying to put it out there the minute you do the survey. And then the third thing here is the second one is homeowners who had adequate insurance. They're not eligible for the program either. Again, this is supposed to be, HUD is looking at this as unmet needs for those folks that weren't insured, and you saw that number of people that there was a significant amount of uninsured folks. The last one is HUD doesn't allow, none of the programs cover replacement of contents. That's just not a part of the program. So it's only looking at the structure and damage to the dwelling. Here's a little bit of information about how to do the survey. It's simply going to restore.la.gov. If you've not done the survey, you could look on your phone right now and go to that website because you can take the survey using a mobile device. We've had about 800 folks that have already done that, haven't had a difficulty doing it. You don't need to be at a computer. There's nothing you're going to have to provide to me other than answer these questions for the survey. And so I want to encourage you, if you were impacted, go take the survey. It'll take you about 10 minutes to do it. We're going to have some people here at the end of the presentation and Q&A that if you're still struggling with it, will help you to do it. Or you can call this phone number and they can actually do the survey for you online, ask you the questions, you can answer them. So we have a couple different ways you can get your survey in.
Sorry, that last number is a 1.
Yeah,
Looks like it's all
735-2001. Okay, citizen engagement. This is where, as we've talked about all the different programs, if you want to provide feedback, here's where you're able to do that. We have that in the slides for you, and I can put that back up in just a minute. Again, just to recap some of our timelines, we've already launched the program survey in January. We're now in that public comment period. As Mr. Forbes mentioned, we hope to have the translations for Spanish and Vietnamese ready by Friday. So that will officially start the 30 days. So you can kind of say, okay, that's the earliest that OCD can even submit the action plan officially to HUD. Then when we submit that, HUD then has time to review it, ask questions, go through their process before they do an approval. Once they do an approval, there's a few other things of certifications that we do, but that puts us at a timeline of looking at wanting to launch officially the program around the summer, late spring, summer of 2022. All right, before I do questions, I said I wanted to get through all the slides, but then I wanted to try to talk a little bit more detail about the program to help you understand. So the Restore program. One of the things that we recognize is not every household is the same, right? Would you agree? Not everybody's in the same position in the same part of recovery as other families, your neighbors. And so we wanted to create a program that would give people different solutions. The first solution, when you apply for the program, if you're eligible, we're going to come up with a grant amount. And you're going to have the option to pick some solutions. The first solution, we call that our program managed, or our turnkey. Everybody say turnkey. Turnkey. All right, you got it. So that is our turnkey. You kind of can envision what that means in your head. You're going to get a grant amount, an award letter from us. You're going to agree with that award letter, go to closing, and then we have contractors that are going to come in and do the repair work. We recognize that there are just some homeowners that they've never had a contractor. They don't want the mess. They don't want to have to, how do I get through all this? Or maybe they just don't have the time. And so they want somebody else just to come in and do it. That's why we call it a what? Turnkey. All right, y'all doing good on the test now. All right, that's our solution one. Typically, we don't have a lot of homeowners that select that option. They choose the next solution, which we call homeowner managed. We recognize that, as Mr. Forbes said, this money, and we don't even have access to it yet, is coming some nearly 2 years after the disaster. And I bet that there are a lot of people out in the audience that didn't wait around for this. You've already started doing the work. You've maybe hired contractors. You have started to do something to get back in your home. And so, and you're still going about doing that. You don't want another contractor coming in. You already have one. And so the solution two allows you more control to hire who you want to do the repair work. You know what your award letter is. We tell you the amount. You provide who your contractor is. It gives you the ability. You have the award letter, and it may tell you we're giving you this much money, but you want to do some upgrades to the house. You want to do something that's different at this point in time. We recognize that. The house has been destroyed. It is an opportunity to do some things. You have the ability to do that. And so that's really why Solution 2 is often very attractive to people, because it allows them to manage it and manage it on their time frame. That's our Solution 2. Solution 3 also recognizes that based on this time frame, we have some people, we know we probably have a lot of people, even in this area, that they've already done the repairs on their home. So they're already in their home. We wanted to make an option that would be available to try to reimburse them for as much as we can on the expenses that they've already incurred. And so that kind of tries to look at homeowners in different phases of their recovery, our Solution 1, 2, and 3. The last solution we have is Solution 4. There are some homeowners that live in what we call a floodway. So it's not a floodplain. You're not in the 100-year floodplain or the 500-year floodplain. You're actually in a more dangerous area, floodway, and HUD doesn't even allow us to use CDBG funds to do rehabilitation or reconstruction on that property. The only way that we can invest money in a floodway is by doing a buyout. And so we will know who those people are. We already, as you fill out the survey with the FEMA data, we have the geocoding so we can figure out who's in a floodway. We'll reach out specifically to those homeowners and give them the option if they want to participate in a voluntary buyout solution, or they can choose to stay in their home. So those are our 4 solutions. Every solution, the way that it works, the first step is you're going to do this survey that I talk about. You're going to know, based on your response, right, at the end of the survey, whether you should call FEMA, right, or hang tight until the program starts and you get more information from us. As you get more information from us, there's some things we do. You won't even have to participate in, don't worry about them. Don't even have to listen and remember this later from me, but we go do something called an environmental review. We have to clear the property environmentally to do any kind of work on it. We do that. Once it's completed, we'll invite you to do an application. Your application will be a lot like the survey, but it's a little bit more in detail, some things that we're going to ask you for. You might want to start gathering, if you had insurance, your declaration page where it shows what your insurance company paid. You may want to look at your last year's tax return. When you do the application, we're trying to make it, again, very feasible for homeowners that you don't have to go try to scan those documents. You don't have to bring them into a center. You're going to be able to take your phone, open up your camera, take a picture of it, and it's going to upload to the application. And so a lot of ways that we're trying to improve the usability for you to be able to go in and sort of experience doing the application to make it easier. But you'll do an application. Then we send somebody out to do an inspection of the home. They're going to come out to your home and they're going to first look and see what work still needs to be done for you to be able to live in that home. We call that your scope of work. We are going out there and they're going to look at every room. They're going to see, again, just the damaged structure. What does it take to get back in the home? They're also going to talk to you about what you have already done. So you may want to have some of your receipts or your contractor, what you paid your contractor, because that's the reimbursement part, that if there are funds available, we want to capture that as well. And they're going to take a lot of pictures. When I say a lot of pictures, they may take 75 pictures of your home, but they're going to take a lot. They're going to come back, they come up with that damage estimate. We take that damage estimate. Let's just say it was $100,000 of repair work that needs to be done. The next thing that we do is we look at what funding, what other resources of money have you received? Now, if you remember, I said that everybody that is eligible for Restore had to have already applied with FEMA. You already had to get a FEMA major severe classification, so that would imply you've received some FEMA money. So whatever that amount is, we're going to subtract that from the $100,000 because you've already got it. And so if your damages are $100,000 and you got $10,000 from FEMA, I'm now at 90. Everybody following me? I know numbers, late at night. But we're at 90. Then I'm going to look and see did anybody have insurance? You're going to be reporting. That's why I said you want to give me the documentation that shows what your insurance company paid. Maybe your insurance company paid you $40,000. So now I've got 90 minus the 40, and I'm left with 50. That's a basic sort of outline of your award that we would be saying you would be being awarded $50,000 to finish the repair in your home. Now, very clear, I want to say something. When you accept that award and you close, because a lot of folks in this room may have been impacted many years ago by Hurricane Rita or even by Ike. We did a program with Katrina Rita, which was more compensation, where when we figured it out, we were able to write you a check for $50,000. HUD no longer allows that. So everybody hear that? That's not allowed anymore. This is a rehabilitation program, a repair or reconstruction. And so when you get your award letter, what it means is you get that contractor, you go start doing the work, and as you complete the work, you call and we go do progress inspections and we go out and see, oh, you've done $25,000. At that point in time, we cut that check to you and your contractor, and you can go pay the contractor for the work. So it is based on completion of the work. And then you get to what we call your final, and we come do a final walkthrough and we finish out those funds. So that's in a nutshell sort of how the program starts, from survey all the way to the end of you getting the construction done. And again, you have those options of allowing us to do it through program managed, and we call that what? The turnkey. All right, y'all doing good. Or you get to do it and manage it with the homeowner manage, and you get to make some choices. Because when we go out and do a damage estimate, that scope of work, I want everybody, again, I wish I would have brought the boards just to help you. We're looking at just basic pricing. Remember, there's not a lot of money, and we want to help as many people as possible. And so when I look at, they measure your kitchen countertops, they're measuring it and giving you a price for this stuff right here, laminate. You might want to put granite in your home, and that's okay. You might have had granite, but the price that we're going to be doing is only for laminate. And so you can come up with the difference. If you pick that turnkey option, we're just going to go back in and put the laminate. And that helps us to serve as many people as possible. It helps us to be fair across the board. All right, now that was a lot, huh? That I said. Let's see how well you do by your questions, and we'll try to help answer and clarify anything. So, and I think we have somebody that has a mic, so we're going to walk around. If you'll just raise your hand, because we want to make sure we're recording this, that we do get your question. Start in the back, and then we'll come on up.
Thank you. Thank you all so much for the presentation. Jeremy Stein here in Lake Charles. Pat, I look forward to working with you and your team in Baton Rouge over the coming years. You'd mentioned this is sort of a resurrection of the 2016, the Restore program of 2016, which was from the 2016 flood. As you know, 3 years into that particular Restore program, only a third of money or checks had been written to the applicants, which is a little concerning. And I know this is, like you said, you've gotten experience from Rita, Katrina, you've gotten experience now from 2016 floods. But it's concerning when you see figures like that and the slow progress that we had with that particular Restore program. Could you give us some assurances with everyone in this room? Again, we want to be team players here. Assurances with folks here in this room, as well as the administrator, which I don't think we've selected yet, which is going to be, I think, around close to $30 million. 5% goes to them to administer it. And maybe you could touch on the administration piece of it. But it would be great just for everyone in the room to have some sort of assurances that, hey, 3 years into this thing, by the year 2025, we will have cut more than just a third of checks to the applicants. So maybe you could touch on some of that for us, Pat. Thank you.
Sure. So I'm not sure that I can corroborate that 30% 3 years in. In fact, the Restore Homeowner Program, after the floods, got money to people faster than any other HUD disaster recovery housing program has, and in effect is finishing faster than any other HUD recovery housing program has. It's slow. Is it slow? Yes. Is the 1.5 years we've had to wait to get money available from Congress and HUD slow? Absolutely. None of it works to help us have the most robust recovery we can have. But it's what we have to deal with. Jeff sort of rattled off a few of the steps in this process. Those don't happen instantly. We got to do an environmental review, a site-specific environmental review on every single house that we repair. We have described for HUD innumerable times how ridiculous that is. Nonetheless, it's part of the process. We have to
And
go out.
I'm sorry, because I could hear your question. That is not a very slow process. The environmental reviews, over 40,000 of them were done within 3 months of us launching the Restore program. It is an expense that we don't like, as Pat said. You're not involved in it. It's a drive-by. It is looking at environmental hazards and things that they have to take pictures and make sure that the property is safe to rebuild on. But that happens very quickly. That's not really, again, I mentioned 80% of our folks chose Program Manage. That is allowing you to do the project at your speed with your contractor. We're only dispersing funds as you call in and as we do program inspections and the work is done. So that's sometimes where you see things. It all depends on what the population picks and chooses. We want to give you that flexibility to decide how you want your grant to be dispersed.
But what I don't want to do is stand here and defend the Restore program either. Our objective is to get it done as quickly as possible. And yes, we've learned things even from the 2016 that are going to let us go faster. We learned things from Road Home that let us do far better for Restore 2016. We get data from third parties now, which reduces the amount of information that a homeowner has to go try to find in their files to get to us. We've got a lot of ways to speed it up, but there is only so much speeding it up. And I would also go to something that Jeff just said, which is the homeowner repair part, which is the vast majority. Most people decide to do their own. We essentially are waiting for them to call us. We send an inspector out the next day. We cut a check within a week of that inspection occurring so that contractor can keep going and rebuilding the house. But we can't go rebuild the house. If it's solution 2 and you're using your own contractor, we've got very little control over how fast that goes. I mean, we provide construction technical assistance. We do that, and we will continue to do that for this program. And what that is just some folks decide they want to do solution 2, and maybe they don't really have the wherewithal to deal with a contractor every day, and they're not used to that and they don't know how to do it. Well, we've got construction technical assistants who can sort of walk them through those processes. In fact, the only people whose houses we're rebuilding now practically are folks who chose solution 2 initially, got halfway through the program or a third of the way through the program and decided ultimately, look, I really can't finish this up. I want to convert to a solution 1. And those are the houses we're rebuilding. Otherwise, we would be done a year ago. So all that to say, think through your own abilities to handle a construction project. There is an option for you that lets us just come do the work, and that can happen pretty quickly. But I do take your point. It will never be fast enough for you or for us, and we're doing everything we can to speed it up from last time and what we learned today. Yes, sir.
Can we sign up for help today?
Yes.
What I gotta do?
We can sit outside with you and do the survey on a smartphone.
We've got a couple questions up in the front that I want to get that have been raising their hands. I know we were in the back, but let's grab a couple in the front, and then we'll work to get everybody.
I just have one concern. When Hurricane Laura and Delta hit our area, it didn't matter whether we were poor, whether we were low income, middle income, or high income, we were all hit. And that concerns me that they're basing helping us on our income. And I'm not pleased with that because it doesn't matter. We were all hit. Black, white, it didn't matter. We were all hit.
When a storm hits, it's not looking at any of that. We understand that. And I want to encourage you. I want to encourage the folks that are making comments. Again, we have these comment cards because those are things that HUD needs to hear. Obviously, Pat's mentioned that's congressional, right? That they appropriate these monies to HUD, and those are just their statutory regulations, but it doesn't mean that you can't express that.
I can
and that's
promise
hard.
you, we have made the case to HUD a bunch of times that disasters don't discriminate according to income. And again, I will say, we've had some success in the past
That's right.
getting that waived. And I can't speak to the chances of that happening again, but we absolutely will try if we get to that point.
Thank you.
All right, I'm sorry.
I have two questions. One about the small business loan program that you discussed, Mr. You said that you all would give it to credit unions or banks, and then they would allocate whether to give someone a loan or a grant. How will they distinguish between the two? Because one is to pay it back. However, I kind of frown on that, even with the SBA program, because here's the thing.
Sorry, let me, I didn't do a very good job of describing it, and this might answer your question.
Okay.
We don't give it to a bank or a credit union and tell them to decide whether it's a loan or a grant. We're gonna set up a program that will most likely be 80% loan, 20% grant
Okay.
for everybody. Same rules for everybody, and banks are not usually one of our lenders. Usually our lenders are nonprofits, planning districts.
Okay, because loan versus grant, that was my
Okay.
question, you know.
Sorry about that.
Because I find it that we are devastated in two instances. Because I asked a hurricane to come and demolish my business, one, but, it's an upcharge or on my profit. So now I have a loan. I didn't intend on having a loan. And then even with the SBA, with the homeowners, I feel like you're devastated because then the SBA becomes owner of the homes, and someone who's owned their home for 30, 40 years, now they have a mortgage. And then if that person dies, then that home has to go to that. So then you're getting, that's wrong.
We
Okay.
completely agree with that too.
That's just my little nugget. I don't like that. Okay, and then also with the reimbursement program, how will you allocate that funding with the reimbursement program? Like say for instance, I've started, but I haven't finished. But how can I get some of that money back? Even though it wasn't enough. It's not enough. Because, that's another subject. But what if like it's going over the money that I had, now I'm going into my kitty, and how will I get reimbursed? How will that program work?
So it's really one program. In fact, I will say most of our homeowners that participated in Restore 2016, they were sort of a hybrid. They were solution what we call 2-3. So by the time we went out to do the inspection, they had done some of the work. So we did their repair, we did their reimbursement estimate, and then we did their repair estimate. And when they went to closing, they were able to get their reimbursement at closing, and then as they did the repairs, we dispersed the repair funding. The way that we have it in the action plan today, so that I'm being very transparent with you guys, is we're proposing to do that exactly the same way for phase 1, 2, and 3 for the low to moderate income. It was only when you moved into phase 4 and 5 that we're waiting on how HUD's going to respond. Are we going to be able to do the reimbursement immediately? But that's how it's calculated. When that inspector comes out, he's looking at what you did and what needs to be done.
And that's kind of the point of the phasing.
Okay.
I'm just going to start talking, so I don't need a mic, thank you.
So we're doing this on Facebook Live. If everybody wants to hear the question.
Okay, wonderful. All right, so my question is I have a couple of clarifying questions. One is, so is this specific, what type of homes, because people lived in different types of structures, right? So you have folks who lived in RVs, you have folks who live in trailers, brick and mortar. You have folks whose homes are they were not salvageable, right? And so they're permanently displaced, but would like to come back to their home here in Southwest Louisiana. What does that look like in terms of this program?
So, great question. Just to clarify, you can also look on our website. It does define, like we do, condominiums, townhomes, duplexes, single-family dwelling, brick and mortar, and we do manufactured housing. Okay, it doesn't cover a travel trailer, something that's on that's not been demobilized. If it's on wheels and that, it's not covered. But if it's been demobilized, we've done MHU. In fact, in Restore 2016, we did complete replacement. We recognize this disaster is a little bit different, that may not be needed. It may be repaired just to the roof. So there's that possibility as well.
And for folks whose homes are no longer,
But when the home is not there, I've said rehab a lot. I should be clarifying, the program looks at the damage. So we can do rehab, or we can do what we call reconstruction. And we have 5 or 6 housing plans based on the square footage of the home. We're able to go in, if you pick that solution 1, and actually rebuild a new home.
so the next question I have is, you said that folks had to already have applied with FEMA. So would they need to have been denied or approved? Could it go either way, whether they were denied by FEMA or approved by FEMA?
If they were denied, they need to appeal. So we want to make sure that they go and do that appeal thing now.
So I worked with some folks who, and particularly the elderly population, right? So their homes were severely damaged. They had insurance, but then they got bullied into paying off their mortgage, right? They were bullied to paying off their homes. And they were left with just a little bit left, but they were constantly being bullied by their mortgage companies to just go ahead and pay it off. And so they're left with very little money and, of course, cannot restore their home back to full capacity. Tried to apply with FEMA, but FEMA's like, well, you got this money, right? So you got more money than what we would allocate for the amount of money that we have designated for this particular disaster. And I want to say it was like $36,000 for Laura in Delta, I believe. So what do you do with those folks, right? Not really their fault. And we have to, I know that these are dynamics that are a little bit external, but those are the realities that folks have been facing, and particularly the elderly population that have been taken advantage of. So what does that look like? Here you go.
So we're going to address the...
Yeah, well, she was wanting to add to it.
I'm sorry.
I'm sorry.
Go ahead.
I heard her say that. I thought she might wanted to clarify that comment.
To add to that, you have people who, because we had COVID going on, who had, and I know I've been to their homes, they had, severe damage to their homes, but because FEMA inspectors did not come out and inspect in person, they denied that because they weren't on the ground and didn't see it. But I've been there and I know that the house had a limb come through it. So what do you do with that? They've been denied FEMA. Or if they had insurance that did not cover enough of the repairs, so FEMA denied them. Couldn't get an SBA loan because they were low income. What do you do for that?
So to be clear, these are real issues, and I know that. But there are going to be some limitations that we're under. We want people to appeal with FEMA. There is disaster case management now, and we can talk more even offline, where we want folks to work with our disaster. That's a FEMA program where they can work to try to do the appeal through FEMA. I will say, not that it's totally positive, but it happens sometimes. You saw the number a minute ago where I had 17,000 homeowners, but then there were 19,000 actually. That's because about 2,000 people that had insurance would have been immediately denied by FEMA, but they appealed and they won the appeal. And so it doesn't happen for everybody, and I understand that. I'm not going to sit here and promise you we can help everyone. We're not going to be able to help everyone.
The appeals are taking months to go through.
Right.
Okay, and even if you go to a congressional appeal, it's taking a terrible time. And we have people, this process is going to run out of money before these people get their FEMA appeals through.
I understand that.
There was an issue about forced mortgage
Yeah.
payoff too.
Yeah. Motorhomes too.
With force, this is kind of a two-part answer because I can't like I said, promise you something if they don't go through the appeal process and get it. But if they went through the appeal process, or even if they didn't appeal and they are major severe, and there was a forced mortgage payoff, our program, HUD does recognize a forced mortgage payoff as what they consider an unmet need. Now there's some in the weeds of that, right? There's some rules to that, because it has to be an involuntary forced mortgage payoff, but I don't have to then count those funds that they received, okay?
Determine if it's involuntary.
Typically, the bank has to provide something that they're going to put in writing that it was involuntary, not that a homeowner voluntary. That's how HUD allows us to do it. We had some people through Katrina Rita, we were able to help. We helped a lot, actually, but then there are those people that we weren't able to. Yes, sir.
So when you talk about those that choose the first option and have your contractor come in.
Turnkey.
Yes, but you also know that you're using the cheaper materials to be fair to everybody.
That's right.
Can that homeowner still pay for the upgraded materials even if y'all do the work?
Not on a solution one. That's, if they want to do that, they're more than able to do that, but they pick solution 2 and they hire their own contractor. And I will say the reason for that is, somebody was asking earlier about the time frames. We can manage the time frames of solution 1 much easier, right? Because it's our contractor, than solution 2. We have deliverables and we have penalties on them. So when you pick solution 1, that turnkey, there are so many days that we give the contractor, depending on a rehab versus a reconstruction, to get the project done. Or then they're penalized monetarily at the end. I can't do that if it's your contractor. And so that's why it's very consistent, the material and stuff they use, that we don't, then I don't have to hear that, well, the homeowner had this material and it wasn't in yet. Let me get to a couple other people and then we'll move, because we've got lots of people's hands going up and I want to make sure we cover everyone.
So if a person goes for an involuntary mortgage payoffs and there are clients, should we advise them then to get a paper stating that this was an involuntary payoff?
Most definitely.
At the time of the payoff?
Yeah, most definitely.
I thought I saw some hands.
There's some at this table, yeah.
I'm just going to ask, how is everyone being notified of this program? And the reason I ask is because I'm guessing that this is not the same money for watershed initiative with the
Correct.
buyout for Greenwood Sheriff's, yeah. Well, we were hearing through the grapevine that this was happening, but we weren't receiving any, definite information in the mail. So how's everyone being notified?
So this program is just starting. Tonight's one of them, right? We're in the 30-day, the program's not ever even launched until we have approval from HUD. Once the program launches, there's a full communication and outreach plan, that strategic plan that's already been written, that starts, where we do outreach events. We meet with your we meet with your legislature that's here. We meet with the city government officials. They do robocalls. We do a lot of different things, from radio ads, the TV ads. With Restore 16, there was a full campaign. And so
Plus, we have your contact information
Yeah.
from FEMA.
that was going to be my second
Oh,
thing.
I'm
Is
sorry.
those 6,300 people, those 6,300 people, we're going to be able to target them, because obviously that's our universe, right? So we want to be able to send something out to them to say, hey, the survey's here for you to go do.
So we send emails, text messages, phone calls, snail mail. We do all those things. The outreach that Jeff's talking about is to reach the people who we've done all that for and they still haven't come in. We recognize there are sometimes pockets of people who, for whatever reason, we just don't reach, and so we keep trying.
And we will do that as the program launches, right? Everybody heard earlier, we don't have any approved plan yet and we don't have funding yet, right? So it's as we have funding to draw, we start that campaign.
T.A. Jones, I understand it's not enough money right off the bat, but the survey gonna be a major hiccup for the individual. And that might throw some people off of the whole project. I know the phone number is there, but they're gonna hear the survey. I wish there was a way that you could get around that or do something besides that.
I'm sorry, you mean just the difficulty of getting it completed is gonna daunt some people?
Yes.
But if they call the phone number, they don't have to go and do it. If somebody can't do it on a smartphone, doesn't have access to a computer, we actually have 2 call centers already that are in place that can actually do the survey for them. So that's why we posted the phone number.
Yeah, if they call that number, they will get a person who will physically fill it out for them online, and it will be their survey going forward.
We can answer questions, help them do it themselves through the phone, like I could do that tonight with somebody, or they can actually do it for them. And that'll be the same thing with the application.
866-735-2001.
He's better with numbers than me, right? All right.
And we do have this board over here, just so everyone knows that QR code will take you to where you can see the survey and the phone numbers right there. Thank you.
KC Lewis, well, I'll touch on what he said, but I have a separate question. I think what I would recommend from what Mr. TA said is I wouldn't call it me personally, I wouldn't call it a survey. I would call it an application. People are more inclined to do an application than they are to do a survey.
All right. Now, can I answer that? There's a very strategic reason it's a survey and not an application. At the point in time that a homeowner does an application in HUD's and legal regulations, you are now anticipating receiving funds. And whenever you are anticipating receiving funds, the property has to have that environmental clearance. You can get yourself kicked out of being eligible if you continue to do the work. The state is required to issue what we call a stop work order. So if I call it an application and you do it, I have to tell you, I don't care what your contractor's doing and how quick you want to get in your home, you have to stop work until I can environmentally clear it. We were one of the only states that launched this, and we, as a best practice, have gone over through many other states telling them when you do a survey that HUD approved, and it's a very basic question, right? We're just gathering information. I don't have to tell you to stop work. And I can go do the environmental clearance ahead of time, which is why I said earlier, you won't even know because they're going to drive by and do it. When it's done, then I invite you to do an application, and I don't have to tell you to stop because I've already cleared your property. So it's a great question, but I want you to understand that that is really strategically why we call one thing a survey versus an application.
So my actual question, but I appreciate everything y'all done. Y'all done an excellent job, by the way. I just wanted to let y'all know.
Thank you.
But my question is, what steps do y'all have so the money does not get recaptured? As far as, I know some programs with the government, the money, if you don't spend it in an X amount of time, the money gets recaptured. If you don't do X, Y, and Z, the money can get recaptured. If the environmental study's not done, so what steps do y'all have to stop the money from getting recaptured, or are there teams in place? Can't that happen?
It can. It absolutely can. I don't remember whether this statute has a deadline or it's until expended. I think it might be until expended, but we do have programs where they can recapture it at the end. Our strategy is get it spent and invested as quickly as possible. That's why we've started working on an action plan last spring.
And that goes for the infrastructure part of it too?
Every bit of it. That's why we have our programs will be sitting in place waiting for us to push the button the day we get that money from HUD, because we recognize, and it's way more important than getting it recaptured. Like if the recapture period is 8 years from now, nobody can wait 8 years for their recovery. We got to get it spent in a hurry, but also well. So our strategy is just to have everything sitting on go so that when we get the money available, it starts rolling.
But it can be recaptured.
It can be. We have never had money recaptured in the past, but it can happen.
It can happen. They typically give us 7 years to expend the funds. And so that's why these budgets, they're budgets, right? Somebody was asking earlier, we put a lot of money into the Restore 16 that probably we didn't need as much as went in that budget. And so then you're comparing the expenditures to it. But we have to try to move it out as quickly as possible so it can go to an infrastructure project that can get done, in time. You can't wait till year 6 on an infrastructure project. So we'll be monitoring those budgets.
Wait, I think We got,
I'm sorry.
I'm sorry, we'll.
It's hard, I'm looking out. When you start looking out, you just see a lot of hands.
So for some of the other programs, specifically the program where you will build better apartment buildings, like one in Lafourche, apartments in Lake Charles are surprisingly expensive. Will those be at multiple rent options, or will they also be expensive?
That's a great question. We have done both mixed income and all affordable. Even when we do all affordable, there's different income levels. We'll have, they've got to have a certain number of people between 50 and 80, a certain number of people between 30 and 50% AMI, like that, even when it's all affordable. But we have also done programs in the past where we mix in mixed income. Those, believe it or not, become more expensive and reduce the number of units that we can produce. So we are not at this time planning on doing mixed income, but it's a possibility, and a comment to that effect would compel us to consider the possibility.
So right now, the apartment buildings still have to fall within this whatever percent below 80% AMI.
Not the buildings. The developer is going to come to us and say, here's my proposal. I'm going to go build 100 units, and I'm going to rent them, 50 of them to people between 80 and 50%, and I'm going to rent the other 50 to people between 30 and 50%, and I'm going to rent at affordable rates for their income, for their family, and I've got the best deal going. Well, we get to look at all their deals and actually pick the best deal and say, here's $1 million to go on top of all the money you've already got. Go build us 100 apartments, and here are the rules you got to follow for the next 35 years. And with the piggyback program, they pay us back over those 35 years, and we reinvest it in additional affordable rental programs. We're still today investing funds from Katrina and Rita projects just like this.
We got a couple in the back that I've been seeing hands raised, and we've been up front, so I'm walking back here so we can make sure we get some in the back.
How you doing? My name is Ms. Toby Edwards. I have two questions. I have personally applied with FEMA, and I sent in a what did you call it? I appealed to FEMA, and I still have not heard anything. And they came to the Lake Charles Civic Center, and I turned in all of my papers as far as what the insurance gave us, and I also turned in the estimates of what the insurance didn't pay for. So what happens if you've already appealed to FEMA? What happens now with this, that we come to this meeting, and how can we go forward?
It depends if they've given you a decision or not. I mean, I don't know all the specifics, but FEMA's going to look at how much insurance you received. As we said earlier, just being again very candid, if you have insurance, they typically don't even do anything until you appeal. And then when you do appeal, they do look at the amount you received if you were denied, but they're not going to necessarily bring you in to make you FEMA eligible just because the insurance didn't pay everything or there was a high deductible. They're going to look at the amount that got paid versus the damage. And so without knowing specifics, I can't completely answer.
So I haven't heard from them. Okay. That's maybe a good sign and maybe a bad sign, but I haven't heard from them. But here's the second question, and I'm sure that somebody else is in here like this, but when you have contractors and you've taken that insurance money, you paid your contractors, and the contractors, 1 minute they're working on you, they may work 2-3 days, the next time you may not see them, and then you pay the money, and you have to see them again. So what happens if the person qualifies for the program and you pay these contractors and they didn't finish the job? How do you count that money, or how is that money? Is that money given back to the person, or what? How does that?
Great question, Ms. Edwards.
Yes.
So that is one of the other allowable unmet needs. Let me be very clear and say this, because we always want to educate homeowners. You guys probably know this already. Don't ever pay a contractor what? Cash. Never, right? You always want to make sure you have a record of what you've paid. If there is a record of, HUD has allowed us to use what they call contractor fraud, not for shoddy work, not for bad work, but where you wrote a check that you can show you wrote it, it went to the bank, it got cashed, you file a police report if he runs off with that money, we're able to basically not have to count that as a duplication. And so it gets added back into your scope of work. But again, that's something everybody should be hearing, just because we all work with contractors. Make sure you always keep a record of what you're paying, because you may have to produce that to get assistance later down the road. But there is assistance when that happens. Okay? Okay, perfect. I mean, that was the requirements with our road home. HUD wanted to see that, number one, they could show that they paid it, and that number two, they went and they reported it to the police. And so there was those requirements that we were bound to see before we could say it was contractor fraud.
Thank you.
Somebody in the back row there before you, oh, sorry, I'm sorry, go ahead.
Okay, my question is, once the funds are awarded, what entity will be over dispersing those funds? What check and balances will be in place so that there's transparency of where the funds are going, and what accountability will be held to that entity?
Great question. The office is our office, the Office of Community Development. When the funds, they don't actually land in the state's bank account. There's a little bit of misunderstanding about that. What they do, the day we sign that grant agreement with them, we have a line of credit at the federal treasury for $600 million. The way we access that money is by sending draw requests up to HUD, and it says, here's what we did, here's how much we spent on it, and we've reviewed all this, and it is all legitimate costs, and it's the actual correct cost. And they send us money. So, believe it or not, they don't just trust us to do the right thing. They also come audit us twice a year, have for the last 15 or 20 years. The Louisiana legislative auditor has people who sit in our office all year long, every year, making sure that there are a bunch of rules for us to follow, right? First thing we got to do is follow the federal law. There's a bunch of those that aren't even in the CDBG, just things like labor laws, fair housing laws, all those things. That make sure that we do those things. Then we've got to follow the HUD rules that come make sure we're doing that. We also have to follow our own program rules. HUD is fairly generic about what they say we have to do, but then we go define some of the things we've told you tonight. Some of those are just policies of ours, like that we're going to require the higher construction standard. Well, if we put that in our policy, they come confirm that we did what our policy said. So we've got, we have plenty of people looking at what we do on a regular basis. Representative Stein can certainly back up the fact, I think, that the legislative auditor will be watching us very closely.
HUD Inspector General comes and audits us. GAL, which is the governor's, not the governor's, the Governor's Accountability Office. Several different entities.
But the main one is HUD. HUD is in our office twice a year, on the phone with us every other week, ensuring that we, one, know how to follow the rules. We don't, I mean, we've been at this a long time, but we still have a lot of questions, and so we call them all the time to make sure that we've correctly interpreted what their rules are so that we can follow them. But they're in our office a lot, making sure that we do it right, and they're not the only ones. Great question. Thank you.
My question is, you've got about 21,000 little bit renters in your survey, 19,000 homeowners that you said got to the appeal, you got that's roughly 55 renters, 45 homeowners. Will that $189 million be split like that?
No, good question. The $189 million is for the homeowner program for homeowners only. It's not for renters. The survey is not for renters. We don't provide assistance, quote unquote, to the renter because there's not a structure they own. Remember, I said CDBG dollars can only go towards the structure. What we provide for renters is we're providing assistance to landlord owners and to developers to go create affordable housing or to fix affordable housing like a mom and pop landlord. That's what the neighborhood landlord program is for. That's a separate, we had that, I'll go back to that slide, a separate amount of money for the renters. The 189 is strictly for what we've really been talking about, the homeowner restore program.
What HUD does for the renters is essentially look at the number of people who are impacted, look at how many of them are very low income, and they make an assumption about whether the landlord's going to be able to rebuild the rental housing. That's essentially the path they take to figuring out how much money to give us.
So for the landlord assistance program, is it the same process to apply for it? And is the timing the same?
It's a little bit different. We plan to have those programs kick off once we have our grant agreement in place with HUD. But no, it's not through the survey. If you're a landlord, you don't need to be doing the survey. That's strictly for homeowners. That's when I mentioned earlier when we have a grant agreement, and as Pat said, we can actually draw down funds. That's when our communication plan and strategy is implemented. You're going to hear radio ads, different things that you will know about those programs.
Plus, we reach out through Realtors Association, Property Managers Associations. We're not perfect at it, but we're getting better every day.
And the restore.la.gov, that site isn't just for the homeowners. That covers all of our programs. Some of you have asked about the small business loans and that. You'll be able to click on the website. The website's up now. So if you just kind of make that a favorite and you can kind of go look and see, they're updating it, putting information on it as we progress. Great question, though.
I have a question about all the allocations, your unmet need and proposed allocations. Who sat on the panel for that? Do we have an even representation of people throughout the parish that gave their input for the allocations?
You mean for how we decided to do the $600 million?
Right, exactly.
This process is a big part of that. We've got to get something out there for you to look at, respond to, and give us your thoughts. In addition to that, since last spring, yes, we've been talking with people in parish government, city government, nonprofits, all to get some sense for what makes the most sense for how to allocate these funds. But I will say the most important part of that process is tonight, is getting public comments so that we can incorporate those into the plan.
I understand that you have involved certain government, but to what extent to really even out the allocation among the entire city? You know, for Calhoun Parish or even just for Lake Charles, really is what I'm concerned about right now. You know, we have South Lake Charles, North Lake Charles. Do we have proper representation across the board for people who gave their input as to what's needed?
I would just go back to saying that tonight is one chance to do that, and the next 30 days is the chance to do that.
Parish implemented what they called their housing assessment. They did a long-term study. We've used that. So we've worked with them. We've worked with the city. HUD ultimately says 80% has to go to these most impacted parishes. And then we use data, right? The FEMA data, the PA data tells us it's what your local governments are turning in as projects and saying what's damaged. When you look at that infrastructure budget, All that is, to be very clear, is taking the, when FEMA, when you apply for your local government applies for a FEMA project and says this school needs assistance, it needs $1 million, that's the project. Then what FEMA says is we're going to give you 90% for Lake Charles, you have to come up with 10%. We've taken what all those 10% are, and that's what that total is in the infrastructure. It's not something, it's a real number. With the housing, we're looking strictly at the FEMA IA data. We look at what FEMA has come up with and said all these homes they've done inspections. We realize, and everybody realizes, FEMA does, so I should make that clear, that their number, that $8,000, is never enough. They don't deny that. What we do is, again, we look at some data. There are homeowners, some people mentioned it here, where they go get an SBA loan, where SBA comes in and they really give you a better estimate of what it's really going to take. We mathematically look at that and say, if FEMA told you 10,000 but SBA told you 100, $90,000 was an unmet need. And I can mathematically then apply that percentage across the board to all of the IA people. So we're not just kind of like pulling a number from the sky. We're using data analytics. We are using assessments that come from FEMA, from local governments, a lot of different
I want to
areas.
make sure we understand your question, though. It sounds like you might be saying, how do we make sure the right amount of money goes to each place in the city, if you will? And we don't do that geographically in the homeowner program. We just take the surveys and then the applications from people, and it doesn't matter where they live, except when we get to the thing about having to have 80% of the money in the mids. What we will do, though, is look at the data, at the survey data. We've got addresses and locations for everybody. If we see that there is a particularly heavily hit and underrepresented community, neighborhood, whatever, we'll be able to tease that out of the data and say, look, for whatever reason, people in this neighborhood are not applying. And we can go target that community specifically.
That's part of the outreach plan, which is great. I mean, we did that with Restore 16. So we recognize, as somebody said, some people aren't going on the web, right? But they're going to church on Sunday. And we did a lot of outreach events on Sunday afternoons with partnering with local faith group-based churches that said, come here and do just what we're doing here. We went and did there and helped take applications and surveys. So,
with people sitting there doing the applications with folks.
And that gave you the $600 million
I'm sorry?
total? And that data that you collected from the...
HUD comes up with the $600 million, not us. HUD came up with the $600 million. That's their allocation. That's not the state's. They look at the FEMA data. They're looking at it much the same way we do. They tell us exactly how they do it. That slide I had up there for you, they're looking at FEMA IA data, folks that had, that's why we can only serve people that are major severe, because they're only funding us for those people that are major severe. Well, it is. I mean, obviously, Congress is the one that appropriated, as Pat said. They write a law, right? They put $5 billion for all the disasters in the United States for 2020 and 2021. And then they tell HUD, you go do an unmet needs analysis, and you go allocate it to Louisiana, Oregon, California. And that's where the $600 comes up. 600 million. Yeah, we need a lot more than 600 million, huh?
Yes, I've got 4 things. One, I've been working with DCMP, and the FEMA appeal process for Laura, the deadline is passed. Is there a waiver if people have to have a FEMA appeal done for this?
So our experience with FEMA is that they always will set a deadline, and that it still makes sense to go appeal and go through that process.
Even though they tell us the deadline is passed, we need to submit an appeal? Okay.
That's correct.
That's another one is with now we have new rules on airships, airship houses with folks for Ida, but that was not in place for Laura. So everybody that had an air house, that family home that the family owned together, they were immediately denied FEMA, and there's no avenue for them to appeal. So what are the rules on that for this funding?
For one thing, we can provide free legal services for low to moderate income folks to try to clear up their titles. We have done that since Katrina and every disaster since, and we'll do it this time.
But if you don't work with people who did not have a FEMA case, then how do they access that?
Right. I don't know.
Good question, take that.
Okay.
No. That's a question we got to capture. That's exactly why we're here.
You know, and it's not that we can't later try to do something. Right now, we're working within the compounds of the money we've been given, and we know that the money was given for this population of people. We need to serve that. If we get more money, as Pat said, it kind of helps us to open the doors, and we've done that. We've hired Southeast Legal Services, a lot of different groups to come in and help do, you know, and in the Restore program, I don't even need so much to get the clear title if we're not buying the house, right? I just need to be able to know who owns it, and you can do that without necessarily having to do succession to go do the repair. The only time that becomes important for us is if we're doing a reconstruction and you're tearing down a home. We want to make sure that every owner, right, signs off on that. You know how that
Or
works.
if we're doing a floodway buyout, then we got to get the title clear.
Okay, and in here on the last section, it talks about wind refit for mitigation. We have been, I work with the Episcopal Diocese in Western Louisiana, and we have been doing homes in DeQuincy, and we've made sure that we're using actually the Florida building standards so that I want to make sure that, what does that mean? Because I would love to be able to take some of our funds and go in and do wind refits if there's more funding available for that. Do you work with nonprofits in areas like that? And two, in option one, somebody said something about not the best materials. Do you use the Florida wind resistant, resilient rebuilding codes when you do that, your turnkey?
Not the Florida standards. We're using something called fortified standards, but it's
Okay,
the same idea.
Yeah, that works. That's
But that's, I don't want to confuse. You're still going to get laminate counters, but your roof's not going to blow off.
You're going to have energy efficient windows, you know. There's certain, that's the fortified things. And so it's not using substandards. What we're just saying is we're not putting granite in, right? And, you know, it's those kind of things.
Okay, we need to write all these questions down and submit them to that.
Correct.
Yes, ma'am. Yep.
So we as concerned citizens, that's counting approximately 42 people in this room, need to take this seriously. Go out there, and if each one of us says, okay, we're gonna affect 10 people's lives in our area alone, make sure you do that. And give them these kinds of information, and give them the web pages, and if they can't do it themselves, be willing to sit with them and do it themselves. Because we know that the caseworkers are few and far between. We know that. So just want to encourage you guys.
Thank you so much for that message that we're trying to deliver. It's critical. That's why we do public meetings. That's why we hope we get on TV, because it takes a lot of outreach in a whole lot of different formats to reach everybody. And we don't ever reach everybody. That's the honest truth. But we can get better and better at it.
That you guys can help us with, just frankly, is, right, we're in Baton Rouge. You know your community. I've mentioned ways we want to go reach people, right? I know we can hit a lot of people on a Sunday afternoon at a church. There may be a PTA meeting that we don't know about, though, that's at a large high school that we can go to. So as you think about in the next few months, events or things that come up where this might be beneficial for there to be Restore representation, please put that on the card. That's a great way to help us as we're going through that communication
If you suspect there are underrepresented communities or neighborhoods, people who just for whatever reason haven't heard about the program, aren't doing the survey, aren't applying. That's like one of our biggest gaps that we have the hardest time closing, is getting to those communities.
Or language barrier, right? We do put it in Spanish and we do put it in Vietnamese because that's what the census tract says for Louisiana. But if there's something else that you see or a group of people, we definitely, that's where we work sometimes with nonprofits to try to sort of on the ground.
Well, a lot of the people here that are affected are not here tonight.
Sure.
And probably because of transportation and really in North Lake Charles. I mean, a meeting like that should be held in that area, and that way you would have more people that are affected to attend.
Okay.
And I was surprised that this meeting was held here at the Seed Center here on Ryan, because I kind of figured that the people that it did affect would not be here tonight. And we need to make sure that we have it in North Lake Charles because they were severely affected. Thank you.
I just want to say thank you guys for understanding my question and for giving it attention. Thank you.
Thank you.
I know I talked about this earlier, but I wanted to say it for the group as well. I think something that I've heard repeatedly, I work for the parish, and something I've heard repeatedly is just the need for a local presence throughout this reconstruction process. What we saw with the Emergency Rental Assistance Program, what we see with the Homeowner Assistance Program, is that those online programs do not work for our population.
Yes.
And we saw it with the FEMA inspection process. We can't have a virtual program. It just doesn't suit the folks in our community. We aren't a technology-driven community. That doesn't mean there aren't people who it will work for, and it's a great process for those it does work for, but I think we need to make sure we're commenting that we want to have that local presence, and that's heard. We're different in that respect, I think, from New Orleans and Baton Rouge.
No, that's just like New Orleans and Baton Rouge. It's important everywhere, yeah.
And the other, sorry.
There's always somebody that feels more comfortable coming in. We've always recognized that. That's what I was saying earlier. They might even have the phone, but they just want to come talk to somebody, right? They need that assurance, and no. Good.
The other piece I just wanted clarification on, because I know we have a couple of our nonprofit partners here. The option 2 on the Restore program, you can choose to work with a nonprofit in that option 2?
If they're a general contractor, yes, you can. Mm-hmm. Yep.
Yeah, if they're licensed contractors and that. It's an important question. Let me finish answering this question though. Donations by a nonprofit to help somebody get back in their house, that's a duplication of benefits to HUD, just like an insurance check or a FEMA payment. So it's not like the nonprofit can come in and close the gap, because whatever they contribute, they got to tell us the value of that, and we have to count it as duplication of benefits. It's a very tricky thing that we have tried to figure out how to manage, and we have not. But if the nonprofit is a general contractor and comes and starts doing the work, we can pay them just like any other contractor. So that's the caveat.
I didn't interrupt. My question is, it's kind of to piggyback what Ms. Elwin was saying, but to start, we have a lot of people that just aren't here back in Lake Charles at all. Majority of our apartment complexes, we have a lot of older homes. A lot of these places were devastated. So in this Restore program, is there a slot or a place for those that had to temporarily relocate? Because I know I'd estimate, and I don't have a verbatim number, but I'd estimate over 20,000 people are not here in Lake Charles anymore due to being displaced. And in this program, is there guidelines or things that will help bring them back home in any way?
I'll go first, and I'm sure Jeff has something to add, but one of the advantages that I'll go back to that I talked about earlier is we have the FEMA IA database. If they put in for FEMA, they've had to move to Houston now, waiting for a place to live because they can't get their house rebuilt. We still got their email address. We still got their cell phone number. and we will be reaching out directly to people who are eligible in these numbers. So that's one good thing. And I would contend that yes, the Restore Homeowner Program, the affordable rental programs that we'll do, those are all intended to bring people back. The one overarching objective of a CDBG disaster recovery program is to bring the community back. So that's what we're shooting for.
I appreciate it because there's a lot of people.
Nothing really. They have to be they had to have been an owner and an occupant at the time of the disaster. I get if they're in Houston today. If they still own the property, because remember, we're going to rehab it, right? Which is hopefully to bring it back. Now, if they've sold the home, I'm not going to be able to help them. But if they still own the home, we're able to go back and do the repair work, because the goal is to bring them back.
One more slip into that, because I've noticed now the city has a plan, and I think it's through the government. Somebody check me if I'm wrong. The city is demolishing homes for free, right? So if I had a home and it was torn down through this program by the city because it got red tagged, because a lot of homes get red tagged and torn down, would I still qualify?
Potentially. If you were the owner occupant at the time of the storm, the storm damaged your home, and FEMA's program, I think that's what you're talking about. Somebody mentioned that to me earlier. Yeah. They come in and raise the property because it's blighted. You still own the property. You were there when the storm, you lived there when the storm hit. You owned the property when the storm hit, and you still own it. That's somebody else tearing it down, because we would be tearing it down with the program otherwise.
Right, there's evidence that we'll have to look at, right? But we can get that from tax assessor records to show that what the square footage was, because that's what we're going to have to know, right, to do a recon. We're going to, if you had a 2,000 square foot home, that's what we're building back, not 25. But there's enough public records out there to help us do that.
Hold on, sorry.
I want to nitpick your statement to Nicole just a few minutes ago about getting a general contractor to come in. She was talking about nonprofits, and you said if they're a general contractor. If they're rebuilding or rehabbing a house that was damaged, not destroyed, does it have to be a general contractor, or can it be a remodeling contractor?
We actually require licensure through the contractors board.
If I'm a nonprofit, but I am licensed by the state of Louisiana Contractors Board as a remodeling contractor, a residential remodeling contractor.
Yeah, we allowed that in Restore.
Yeah, below a certain amount of money. So there's some threshold up there.
There is. It's like, I forget what the 11,000, don't quote me on that, but there is in the statute, for remodeling contractors that they can do so much work. There's a dollar amount, and we did allow that in Restore.
Okay, I just wanted to be clear. Thank you.
No, thanks for the clarification. Pat and Jeff, a lot of houses were affected, and the Restore program is handling $600 million. 46% of that is infrastructure, which we didn't talk about at all. What is the infrastructure for sure?
Let me go back to that. It's essentially two things. Oh wait, I'm going the wrong direction.
Sorry, I had gone back to, that was part of my test slide that I had for you. You're gonna do it next.
Was that schools? Schools and
Okay, it's two things. Public assistance match. When a school gets whacked and has to be rebuilt, or a fire station or a bridge, FEMA comes in right after the storm, and they start writing project worksheets, is what it's called. And they say, okay, this school is going to cost $10 million to rebuild. Well, that's great. They say, let's get started. Let's build this $10 million school. They only are going to provide you $9 million. The school board's got to come up with the other $1 million. This proposal of $196 million is what our best estimate of what the match for Laura and Delta public assistance will be. And that is to keep from having the local governments fire districts, school districts, nonprofits, what have you, anybody who was a FEMA applicant from having to come up with that match. I just talked to the mayor of Lake Charles, and that number right now is at about $25 million just for Lake Charles on public assistance from the two disasters. So that's what this $196 million is. And it's not carved in stone. It is in our proposed action plan, and we are welcoming comments about whether this is smart. But this is what we're proposing, is that we cover the public assistance match for local governments and nonprofits. The next piece of it is hazard mitigation grant program match. I don't know if I covered this clearly enough at the beginning, but Congress put in 15% mitigation funds on top of HUD's unmet need calculation. So HUD's unmet need calculation wasn't actually 600 million. It's more like 486 million or something like that. Then Congress said, add 15% to that. That's for mitigation activities. Mitigation activities are not things that are recovery related. They're not rebuilding your house. They are for reducing the impacts of future disasters. And so they insist that we spend it on mitigation activities. There's a lot of different things we can do with that. What we're proposing that money gets spent on is, remember how I just described public assistance? FEMA comes and pays 90%, and then cities got to come up with another 10% to get the whole project cost. Well, hazard mitigation grant program is just like that. It is another FEMA program where they give the state money. The state has now allocated that money to the parishes and said, go do smart stuff that reduces risk in future disasters. Problem with that is it's got a 25% match. We very often run into local governments who say, I can't take it. I can't accept the HMGP grant because I can't come up with the 25%. So our proposal here is to pay them, use the funds that HUD has said must go to mitigation activities and pay that HMGP match for parish government. And that's just the proposal. There are other options. We could use it, we could just allocate it to parishes and let them, again, go do smart things. They'll have to come up with the match themselves if we do that. We could add it to the homeowner program or the rental program to pay for those extra construction standard enhancements that I talked about. Because those are clearly mitigation activities, right? So we
But not infrastructure.
no, but we could use that. They would let us use this mitigation money for, we're calling it infrastructure. That's our term. HUD's term for this $78 million is mitigation. We could do that to housing. We could do it to infrastructure. We could do buyouts like we're doing some places. There's a lot of.
Well, Pat, in Central Lake Charles, drainage is a terrible issue, right? Terrible issue. That's what I'm thinking of, infrastructure, which is part of the mitigation, which is part of the.
Spot on. So let me just propose a scenario. Calcasieu Parish got an allocation of hazard mitigation grant program funds from GOSEP, from the governor. The governor said, here's how much everybody gets, and it was based on damages. They're sitting there right now, figuring out what projects they're going to spend it on, specifically for what you're talking about, to reduce flood risk. What they don't have is the 25% to pay that match, and what we're proposing is these CDBG funds would pay that match. Does that make sense?
I think that was my question about when you talk about rehabilitating.
My question on this sheet here, you have unmet need infrastructure, 6%, 141,000. But you go to the program, you allocate 146%, that's 5% more than unmet need.
I'm sorry, say
right here. On infrastructure, you got 6% unmet need, but in allocation, you give them 46% of the money.
So, this percentage, let me get that up on the screen so everybody can see what we're talking about. Thank you. Okay, this 46% is the most important thing to look at because that is the percentage of $274 million of the 600. Over here, all this represents is we've gone through an unmet needs calculation too, and it's different from HUD's, and big surprise, it's higher.
So you're saying that's HUD 6% unmet need, and y'all is 46% unmet need?
I'm saying we came up with this number as an unmet need. What we know we got from HUD right now is this, so that's what we got to work with.
And that's remaining, just so we're being clear. We're saying that it's 600 plus the 2.3 was what our unmet need was. HUD just came back with the 600.
Oh, I'm sorry. Whenever you take this number that's got this huge economic development, $2 billion in it, well then $141 million only makes up 6% of $2.3 billion.
When you get to the final allocation, you get 46% of the money.
That's because this number is 46% of this number.
The first number is fictitious as of now.
Gotcha.
This is what we go to Washington, D.C. with, or your congressional delegation saying this is what the state needs, okay? This is what actually HUD says we're giving you. So these percentages are based...
No, sir. What HUD told us was you get $600 million. We did. The Office of Community Development and partners in the state and all the local folks we've talked to, this is what we're showing you tonight is our current proposal, and it's what we're asking you to comment on. If you think that's too much, we need to know that.
I think you should have found that economic revival program, so should come down to economic revitalization and not all gone to infrastructure.
I hope that you will write that down for us and get it submitted.
They're not going to turn the lights out on us, but they're being gracious to us because we're hitting their time frame. So I want to answer questions and let you make comments on the card.
Ask one question. When we're talking about the recapture, I just want to know that $600 million. I want to know if we do not spend it. I'm just saying, I hope that we do. What will happen to it? Does that money stays in our parish, or
it stays where it is in the federal treasury. Remember, we never get this money until we spend it.
So we have to spend it. If we don't, we lose it. All right, thank you.
Yes, ma'am. I tell you what, I will, if you have other questions, I will hang around outside here just as long as I need to answer every one of those questions, but I think they're going to run us out. Before y'all all start leaving, I just want to say thank you so much for taking your night to come out here and share your thoughts with us. Really appreciate it.